Greetings friends, this is Nisar Kotecha. I welcome you to my channel Trade with Nick, and today we are going to discuss about a strategy on gold. This is an intraday strategy. I hope you will like it. Pardon me if the video is little longer because I am going to discuss money management and risk management for this particular strategy. But before getting started, make sure to subscribe our channel. We are as of now today 400 plus subscribers strong, and I hope you have seen our previous videos also. We have discussed this strategy already in our previous video, but that was a theoretical part, and today we are going to see how we have implemented this strategy successfully on the gold futures contract. So without wasting further time, let's get started. Before starting, make sure to watch our video on engulfing, that is bullish engulfing and bearish engulfing. The link will pop up here on the right hand corner, upper corner. So if you see the video, you will know the logic behind the strategy, the emotions behind the strategy, the jargons used in the strategy, everything is mentioned there. So cut to the present day, we'll be discussing the strategy, but to know more about engulfing, it is a request to watch that video first. Okay, so let's see what is the core strategy. We are going to use a candlestick charting type, and our time frame will be hourly. So we'll be using 1 hour charts. The trading style is intraday. This is not a swing trading or a positional. This is an intraday trading strategy. The underlying asset used is gold futures contract. Now, one thing I should mention here is that this strategy has been backtested on gold. So please don't change any of the parameters and implement the strategy on your own unless you have unless you are an experienced trader, right? Because we do not want you to lose your hard-earned money. The risk reward ratio maintained here is 1:2. That is आने को 1 रुपया, आने को 2 रुपया, जाने को 1 रुपया. The buffer we are going to use is 1 rupees on each side. That is entry and stop loss. We are going to use 1 rupee of buffer. It is suitable for full-time traders. So those who are part-time traders or those who are working professionals, this strategy is not for you. But hey, there is a good news, right? The good news is that we are making a code for this strategy to create an automated trading system, that is ATS, and we will be launching the code very soon in our YouTube channel. So you can use that code in Ami Broker or MetaTrader also, right? But before that, we just need to juggle with the strategy first. So this is not about PowerPoint presentations and everything like that, but we'll be jumping into charts and we'll see how the strategy works in real scenario. Okay, so let's see. This is a gold futures chart, and it is a 60 minutes chart, that is an hourly chart. And if you see, this is a live market going on, but we will be seeing from 11th of April. So this is a sample trade, how it works. If you can see this candle, this particular candle is a green candle, and this red candle is our trigger candle. So I have marked a down arrow here because it is a bearish engulfing candle. So how we will open a position here? This is our position tool we are using in this charting platform. For those who are wondering which platform is this is a TradingView platform, right? So in this tool we have marked our entry point, that is this line, and our stop loss region is this red region, and our target is placed till this green region's end. Now if you see, we have a risk reward ratio of 2:1 here. You can clearly see that, and I have mentioned the points earned in this section here above. So we have earned around 144 points in this strategy. This is a bullish engulfing on 10th of April, and we have earned around 91 points in gold. Now we have not achieved the target, but the thing is that our broker or the RMS team of our broker will square off our position at the end of the day, because it is an intraday strategy. One more thing which I forgot to tell you is that we are always going to use bracket order and cover order, because bracket order and cover order are used in intraday positions only, right? There is no way you can use it in swing or positional. If something wrong happens, then your broker will cut your position with their RMS team or whatever they have their system, right? So it is a request to you guys to use only and only bracket order or cover order. For those who don't know what is bracket order or cover order, it means the stop loss price and target price are already set in the system, then only you can place the order. That is a simple thing. And yes, we will not be using trailing stop loss or anything like that. Simple target, simple stop loss, and we'll forget about it. Okay, now this is a loss trade, purely a loss trade. There is a bearish engulfing and we have opened our position below the low of this bearish engulfing, and our position is closed here with a loss of 97 points. That is fine, that is part of the system. On 8th April we have no trades, and let's see, we directly have a trade on 1st of April wherein we have earned around 11 odd points because the day was over by then, right? We don't have any other trades on 29th. Okay, in this case of 28th March we have a bullish engulfing here, but as you can see here, this was our entry price. Let me just mark it for you. This was our entry price. From here we were supposed to go long like this. We were supposed to go long, but this wasn't triggered, right? So our trade is not triggered. We don't do anything if our trade is not triggered, right? In this case it is a stop loss trade. Here we have found a bullish engulfing and our trade is triggered at this point, at this candle, and then we have hit our stop loss. Now if you see, on the same particular day we have another pattern forming here. Let me just show you with my snipping tool. If you can see closely, at this point there is a bearish engulfing. This is my green candle, and red candle has engulfed the green candle, and then we were supposed to go short and we would have made around 100 or 110 points in this. But the theme of this strategy is that you should not be over trading, right? If you have one trade in a day, that is sufficient. So we'll be trading the first trade of the day, nothing else, right? In this case we have this trade and we ended up in loss, so we'll book the loss, nothing else. So we have lost 81 points. On the next day we were in good profits, but the market turned and we got around 4 points. That is break even trade. In this trade also our trade got properly it is not executed actually, but if you see, this last candle has broken the high and it might have got executed, but then there will be a loss of 4 or 5 points, not more than that. So I'm not considering, because in last 60 or last 30-40 minutes no broker will open your position, right? This is 22nd March, no trade. Okay, this days are not considered, right? This is a half day. It has started from around 5 o'clock in the evening, so we are not going to consider this trade. Talking about 20th March, it was a good day. We made 112 points. Again we have made 225 points. Here we have lost around 60 points. We have lost around 60 points, but that is fine. We have gained again 24 points here, 39. We have lost a little bit of 11 points. We had a stop loss of 46 points. We gained 158 points on 11th of March. Then we have no trade. Okay, on 5th of March we gained 108 points. On 1st of March, no trade setup, and this is 25th February, and we gained 258 points. Too much. That is too good, right? Okay, so let's see the money management and the risk management, how it is going to act. So I have mentioned all my trades in this spreadsheet, and as I told you, okay, let's first discuss how we are going to do the money management. So the margin required for cover order or bracket order is 60,000 rupees. We are going to use a buffer of 40,000 rupees. So the total capital required is of 1 lakh rupees. Now if you see, I guess the minimum margin is of around 55,000 rupees odd. But let's just round it off to 60,000 rupees. The buffer is used because if you have consecutive 4 to 5 losing trades, then what you will do? You will just quit trading no, that is not the way trading works, right? So you need to have some buffer capital when you are starting with. If you see here, you have lost 2 trades, though the amount is of 5,600 rupees, you can see here, right? But still you need to have a buffer of this much. Fine, fair enough. And we have considered slippages plus brokerage and taxes of 15%. So we are deducting 15% out of the total profit. The total profit is calculated here, right? So after deducting the total profit, we will get our net profit, and the return on investment, that is this net profit divided by the total required capital of 1 lakh rupees, will come to around 50% plus. We are maintaining a risk reward ratio of 1:2, and the money management rules say that you should increase your lot size for every 1 lakh of profit. So if you earn 1 lakh rupees of profit, you will be working in 2 lots. Now if you know, the maximum gold lot is of 1 kg. So for those who are trading, 100 pips equals to 1000 rupees, 10,000 rupees, sorry, right? So people know that if you earn 100 points, you will get 10,000 rupees. Very simple. So in total, we have earned around 624 points after deducting everything, this losses and everything. We have earned around 630 points. And if we convert it into profit per lot, then it will come to around 62,000 rupees. If we deduct 15%, that is too much. That is what we can say, brokerage and other charges will account for only 5%. But as we are considering trading as a business, we are considering some days wherein you are unable to trade. A very good day, but you are unable to trade. That might happen. So we are considering every possible factor, and we are reducing our profits, and we are being very prudent. So if we consider 15%, it will come down to 53,000 odd rupees, which will come to ROI of 53%. Let me just show you what would happen if we just add one trade in this. So last trade is of 28th February. Let's see, 28th Feb 2019. Okay, this trade was a short trade, and our entry price is at, let's say the low is 33,218, so 33,217. We will keep a buffer of 1 rupees, and our exit price is at we didn't get our target because our target was very huge actually. We are not expecting that, so our broker will square off the position at the end of the day before 20-30 odd minutes. So our closing price for the day is 32,970. That is 32,970. Okay, so let me just drag this formula. Okay, so we have earned close to 247 points, right? This is a mistake here. We have earned around 247 points. That is 24,700 rupees. So see, my purpose of sharing such kind of strategies with you people is that you should know the power of technicals in the short term, and people are making money out of it. Why should not you, right? You should also be making. So that's it for today. I hope you like our video, a little effort, and make sure to subscribe our channel, and you can contact us on our email, through our email or in WhatsApp, and make sure to follow us on our social cover. Our handle is TradewithNik, and the links are given in the description below. See you guys in the next one. Till the time, peace.